Morning guys, morning, how are you doing? Right, I'm going to do a quick forecast on USDCAD as I was going through my weekly profiles and looking at where opportunities are going to be in the coming week. I've seen a setup on USDCAD which might interest most of you folks who do like swing position, long-term positions. There's a nice setup on USDCAD, so I decided to record and illustrate and share with you guys what I have seen and how you can also look into implementing in your trades, right? So looking at USDCAD, right? If we are to look at the way price has been moving for the past, say, since the end of COVID, we've had a run to the upside, right? As of July 2021, we had a very sustained uptrend, right? That tested the previous 2020 highs, not really the highs, but in terms of the volume of the candles bodies, we did test the highs of 2020. Now, with that in mind, that high was only sustained up until, that uptrend was sustained up until November of 2022. And then from there, you can see market has been trapped inside this monthly range here, right? So it might look like it's a very small range, but when you go on to lower time frame, then you see that it's actually a range that would have been offering great long-term setups. What do I mean by long-term, right? So we're talking of swing positions here. Let's say you enter in a position, you're looking to hold that position for like more than a month, 2 months, 3 months. You are in a position, right? So with this range in mind, right, this range that was created after this uptrend here, market was basically consolidating on the monthly chart. It was consolidating between the high of October 2022 and the low that was formed right here, July 2023, right? So you can see we already have a narrative. We've got a high and a low. So that's external range buy stops, external range sell stops below the low, right? So yes, of course, it's a monthly chart, so the range is going to be quite huge in terms of pips, right? But that's what we need because we're looking for long-term positions. Long-term positions should yield you more than 250, 300 pips per position, upwards, I don't know, 500, 750 pips. That would be your target, right? Meaning you are going to enter positions that have got, say, a higher stop loss than you normally do. Like maybe you normally enter a position with a tight stop loss of 20, 30, 40 pips. But when you enter a long term, a swing position, you are looking to have a stop loss of, say, maybe 100, 150, 200 max stop loss, meaning your reward ratio also has to tally with the stop loss that you have placed. You can't place a stop loss of, say, 200 and you're only targeting 100 pips. Yes, that could be you, but it doesn't make sense in terms of your risk management. If you are risking 200 pips, minimum should be at least another 200 pips for you to have a 1:1 return ratio, right? So with this profile in mind, right, market has been consolidating, traded to the highs, come back to the lows, to the highs, to the lows, and then to the highs, and then we tested the equilibrium point of consolidation, and then we've moved back now to the higher parts of our range. Now this is where things start getting interesting. Now if we are to do our institutional order flow here, right, we mark out our premium areas, right? So that's number one, right? That's premium area number one, which is a MN bearish So that's your bearish order block on the monthly chart, and that's where price is currently trading at, right? So this is the month of October, right? This is the month of October, and we've seen a proper redistribution into fair value. Right now price is trading into fair value, and we're already above the equilibrium point of our monthly range, right? So for a swing trader, this is a nice setup for shorting USDCAD, right? With a stop loss well above 1.39775. You see, that's how you have to look at it if you are going to be swing trading, say USDCAD. And where is your target? Your first initial target should be internal range liquidity of sell stops below the old low of September, right? Below the old lows of September. This is where your internal range liquidity of sell stops, right? So that's your first initial target, because you'll be expecting market to trade and close below. Chances are very high that we are going to see market trading towards this level here of 1.34, $1.34 on USDCAD should be your yearly target, or even say up until say maybe February and March. That should be a target for your long positions, right, from this monthly bearish order block. You see, ultimately you're looking for price to retest this low of $1.31 on USDCAD. That would be your ultimate long-term target. Now, with our focus, with our bias on dollar being bearish, right, with our bias on dollar being bearish, chances are very high that we are going to see the current candle on USDCAD trade to the downside. Now, there is a lot of factors now that need to be fulfilled. There's things in terms of fundamentals that that price has to react to, and we are already seeing one of them being fulfilled. Now, with the CPI, that came in on Thursday, if I'm not mistaken, with CPI that came in on Thursday, it came up a bit hot. Market was expecting 2.3, and then it came in at 2.4, meaning inflation went up year on year for the dollar. You see, we're talking of the dollar here. Inflation for the dollar went up. So all that talk of Fed delivering another 50 basis points on their November meeting or December meeting, I think the odds have now dwindled. The odds have now lessened. There's now less chances that we are going to get another 50 basis rate drop from the Fed. Now, if they do, obviously they're gonna do 25 basis points, and that's gonna push dollar to the downside. With that, it will take USDCAD also lower. You see, that's how you have to look at it. So as the trader now, you need to be in a position to keep abreast of all those developments, right? So that you know what you are looking at long-term wise for the pair that you are trading. Right? Interest rate differentials are the talk of the town right now. They matter more than any other fundamentals. So rate decisions are very important now to your setups. Now, if you are looking at, say, USDCAD, right, I'm just going to switch to the calendar quickly. Let's put okay, now I don't need to disturb my filters here. So Monday, CAD is on holiday, right? CAD is on holiday, but US is not, right? You see, we've got fundamentals from US. FOMC member is going to be speaking. We've got federal budget balance. Whaler is going to be speaking. You need to be very close and listening to what this guy will be saying. So you can see we've got quite a lot of FOMC members that are going to be speaking on Monday, right? And then on Tuesday, what do we have? We've got CPI for CAD. You see, that is on Tuesday, and then we've got another FOMC member speaking. right? And then on Wednesday we've got nothing much in terms of, yeah, we've got not so much high impact. We've got 2 stars for CAD and US. And then on Thursday we've got Euro CPI that is going to affect dollar, and then ultimately also have an impact on USDCAD, right? And then we've got retail sales also on Thursday. Now these are definitely gonna move the dollar. So negative release on these fundamentals here, or less than expected release, then we're going to see dollar move lower, which in turn is going to fulfill our our forecast on that asset that we are looking at, which is USDCAD. And then Friday, what do we have? There isn't much in terms of US and EU. When I say there isn't much, I normally just look at 3 stars, right? I normally look at 3 stars. Now coming back to the chart, right? Coming back to the chart, then we now jump onto the weekly chart. You can see already the setup that we have on the monthly chart, and from this high to this low, price is in premium, right? If you are to grab, say, your fibs, right, your fib retracement from this high to the low, which is like our target, you can see we are well above the 62% retracement ratio. We are well above the 50% retracement ratio. So we are looking at premium prices right now for shorting opportunities, right? So when we go to the weekly chart, let me get rid of this fib. When we go on to the weekly chart now, you can see we have traded and filled all this imbalance here, right? Areas where we would have been looking for retracement, areas where we would have been looking for shorting opportunities. Yes, the first time we came back to this imbalance here, to this fair value gap, price did drop for 2 weeks, but then after we traded through. Now where is price heading? Number one, we've got a weekly bearish order block right here, right? That's a weekly bearish order block, and we've got a fair value gap. So that's the fair value gap high, and this is the fair value gap low. So that's the fair value gap low. Let me just put a proper straight line. Let me just put a proper straight line there. I don't like lines that are not straight. That's as bad as it can get. So this is our FVG low. That's our FVG low, and then here we've got our FVG high, right? So that's the high, and you can see where price is. And then here we've got the weekly bearish OB, right? Here we've got the bearish order block on the weekly chart. Now that's a high probability scenario that we have here, a bearish order block that's accompanied by a fair value gap. That's a high probability setup for shorting opportunities. So now for a long-term trader, right, entering a short position here, right, using the weekly profile is the ideal scenario, right? If you're going to use the daily profile, you need to see also price trading into a high probability range on the daily time frame. Right now we are at a high probability shorting area on USDCAD weekly chart, and you can see the target is right here, this level that I marked on the monthly chart, the old low that came in on the week of September 24. That will be your target for shorting opportunities. We could see price probably open and trade into the order block, right? But if you are shorting, right, if you have opened a short position already, that move to the upside should not deter you to say that, oh, you're now going to lose, because remember, your stop loss is above 1.39, above $39, so basically above $40 on USDCAD, right? So that move to the upside should not deter you. Now then, how do you calculate your risk? Right, so you need to go to your platform, right? Let's say on this asset here, if we are to forecast, say, a short position from here, right? Short position from here with your initial target at $1.34, and then your stop loss above $1.39. So you can see there your risk reward ratio, you're looking at 1:1.15. You see, that's not bad. You see, so you're basically saying if you are risking say 750, you're looking at a gain of 1,378. So that's a 1:1.5 return ratio, right? So you do this when you're on the profile that you are using. You cannot do this when you're on the H4. By the time you get to the H4, you already have this setup in place. You see, so if you are a long-term trader, this is a very nice opportunity, a very nice setup that I've noticed that can yield. It will definitely yield better results if you enter a short position at the current level. So whatever happens, if market does trade to say $40, right, then the chances are very high that it's now in an uptrend. It's going to keep going all the way up, right? If I just zoom out a bit, you see, at this level here where we are currently at, right? Let me just zoom in. You see, this is the current level that we are at, right? And you can see price does not really spend much time above that level, right? You could get another week of price action with price above, say, the current level, but then eventually market should move lower. And with our focus on dollar being bearish, chances are very high that for the rest of the year we could also be bearish on USDCAD. Let me just see what the daily looks like, right? And you can see also on the daily time frame, market has really moved to the upside, and chances of a move lower now, they're quite high. You see, they're quite high for price to move lower. Yes, market can keep going up and up and up, but there's times when you can look at the technical chart and then you can see, let me see, there's something I want to illustrate to you guys. There's something I want to illustrate, right? You can see if we are to see this move here, there's a move in price from here, from this level to the current high, right? And then you replicate that, right here. You see, measured move, a measured move on the technical aspect of side of things. We have a measured move from July 24 up until August 24, right? It's the same move that has happened now from September 24 up until October 24, October 14, and then September 24, and then here we've got 11 July up until 5 August. We've moved an equal a price that is equal in terms of the moves, relatively equal. Might be difference in pips, maybe like 4 or 5 difference in pips, maybe 10 pips difference, but that's exactly a same move to the upside and same move to the upside right here. So the chances of us trading lower now, they're quite high, right? They're quite high, especially after taking out all this internal range liquidity here on these premium areas of daily bearish order block, daily bearish order block, which is high probability, price traded above, probably engineering short liquidity. We're going back to supply and demand, institutional supply and demand. So So yeah, that's basically what I wanted to share with you guys, to say, guys, have a look, and if it's something that interests you, then next week, if you cannot be in a position to enter when market opens, then next week observe how price is moving around this premium range, right? It can open and then just start moving lower to fill up the imbalance right here that was created with the last week's candle. It can just open and then start moving lower, and from there you can get probably 2-3 consecutive bearish weekly candles. So yeah, I hope you have picked a few things, a few 1 or 2 pointers there that you can use in your trades in the upcoming week. And yeah, that's basically about it, folks. That's basically about it, and I'm sure you can all see the setup that I have illustrated and explained in detail. I'm not going to go to H4, H1. My setup is not based on that. My setup is based on the weekly chart, meaning if I'm to enter a position here, I'll only be interested to see how this trade is going next week Friday when the weekly candle close, and then from there you can make a decision whether to enter another position or to hold your current position, depending on how next week's candle would have moved. Imagine if we do get a next week candle that erases the gains from last week's candle, let's say about 80, between 70 and 80%, you get a bearish candle that's already down to $36. Okay, if you do get that, then the chances of, then you as a trader, you need to be adjusting your stop loss, you see, and also depending on the lot size that you have opened that position, whether you decide to take off some of the profits or keep holding, you see. So that's basically a decision that will be made next week Friday before the candle closes. So I'll keep you abreast on this setup here. I've already opened my position on Friday on this setup. I opened a position Friday afternoon. So yeah, we'll see how it goes, and yeah, that's pretty much about it, folks. That's pretty much about it. And if you haven't subscribed to the channel, guys, and you're watching the videos, yeah, you can just subscribe if you want, and make sure you've got your notifications on, so that whenever I upload something, you get it right into your inbox, so that you can watch before the market move aggressively. You don't want to be late to a profile or a setup that I would have shared. So yeah, it's always good to subscribe to the channel if you want. So yeah, that's basically about it. And for those who haven't joined the mentorship, if you're interested, you can simply inbox me or send me a message on Telegram or via the website. So yeah, I wish nothing but the best for you guys, and happy trading, folks. Thank you.